All right, what's going on, Block Circle team? Hope you guys are all having a wonderful end to your week. Today's video will, again, hopefully be kind of a quicker one, maybe 10-15 minutes. We're just going to talk about some classical charting patterns, which, again, as I mentioned last time, I'm not super big on the specifics of these. I think the most important thing you can focus on are candlestick setups, which we'll talk about in the next video, and just in general, market structure, higher lows and higher highs. And you'll see pretty much every one of these, and lower lows and lower highs, every one of these charting patterns we're going to talk about is just going to be some rendition of lower lows and lower highs and higher lows and higher highs and the trend breaking of these patterns, right? You'll see pretty much, I'm pretty sure literally every one of them is that, but I'm going to go through what the most common ones that I see are, and these typically work better in my experience in traditional finance markets like stock market and forex and fixed income and all that stuff. I find they don't apply as well in crypto. There's a lot more I don't know, fake outs, if you will, but in general you're going to be seeing these all over, so we might as well talk about them. We'll probably talk about maybe a dozen of them here today. And again, the most important thing to keep in mind before we go into it is they're all just going to be different ways of recognizing higher lows and higher highs and a trend change happening, and lower lows and lower highs and a trend change happening, or trend continuation. Okay, so let's start with like the two most basics, which would be a double top and a double bottom. And they're typically just going to look like M's and W's. And these are really good setups. I don't find these to be that common personally, but these are really good setups. And essentially, where you might see them occur is, you know, maybe you have, let's see, maybe you have a big picture move that's done something like this. And then you've had, I don't know, a multi-month pullback like this. And you start a new bounce, you make a higher low. You come back into this peak. And then you sell off. And you lose this higher low you made after the first peak. This is a sell signal. Okay? But again, do you really need to know that it's a double top? Because big picture, all it really is an existing trend that fails to make a higher high and instead makes equal highs and then comes back down and makes a lower low. It's a big M, it's a double top, it's bearish, it's a trend break. Simple as that. And the inverse is true for a bottoming formation, right? You just have a simple downtrend, making lower lows and lower highs, but then instead of making lower lows, you make an equal low and then a new higher high, thus a new uptrend where your lower lows and lower highs are broken. And now you've got higher lows and higher highs. Simple as that. And then you could look to add afterwards on future higher lows. And of course, this is invalidated if you lose the double bottom. And you can get triple and quadruple bottoms, but the more times this level is tested, the more likely it is to give. Okay? And so you'll notice as well, pretty much every pattern we go talk about here, I think there's going to be, like I said, maybe like 12 or 16 of them total, but it's really just going to be like 5 to 10 because they all have a bullish and bearish variation. Like we saw, there's the bearish double top and the bullish double bottom. And the next one is going to be a head and shoulders, mainly because it looks like someone's head and shoulders. That looks more like a damn penis, but you get the general idea. It's going to be basically, again, we'll start with the bearish version in an uptrend. You would have an uptrend where it's making higher lows and higher highs, and then you come back down to your last higher low, and typically in an uptrend, you want these higher lows to be a reasonable distance above the previous one. You don't really want every higher low to come all the way back to the previous one. It's still technically a higher low, but things start to get a bit sketchy if every time you push to a new high, you're fully retracing always all the way back to the previous low. So yeah, we have an uptrend, right? But then instead of continuing to make significant higher lows, maybe at the 50% retrace or the 61.8% retrace, we come all the way back, and then we put in a lower high, typically back at this previous highs level, and then we break what is called the neckline. And again, you can imagine where this comes from, the idea of a head and then someone's shoulders as if they were kind of shrugging them up, and then their neckline. And this is a sell signal here. But do we even need to know it's a head and shoulders, right? Does that even really matter when all it really is a trend that's making higher lows and higher highs, and then fails to make a higher high, makes a lower high and a lower low? To me, this concept is more important than being able to point out, oh, look, it's a head and shoulders. You know, like that doesn't really matter if you don't know that you would look to take some profits and maybe flip on the short side when this trend on the lower time frame rolls over. Maybe look to short some of these bounces. And then especially when this trend and level breaks, maybe you cut your bigger position that you've been playing throughout here. That's what matters the most. And then again, the flip side is true when you have a downtrend, but instead of putting in significantly lower highs, you fully retrace back to the previous one and then put in a higher low instead of a new lower low, typically at this previous low's level, and then you break the neckline. This can be a decent entry like we were talking about before, where if you're watching this move up, you got a little uptrend. Typically, you're going to want to fade these in a downtrend because you're expecting a lower high. But then you notice instead of a significant lower high, you've made an equal high. Maybe on this new little lower time frame downtrend here, you would look to get long on the next break up, which is right here. And you can start to add on these lows, or you can just wait until you break the neckline. And that's a pretty good trade setup there too. Okay, so we got the double top, the head and shoulders, and then the next one is the bearish rising wedge and the bullish falling wedge, and they look something like this, where you have higher highs and higher lows. Typically, these highs get closer and closer to each other. You know, maybe something like this, and it goes less high than the last time, less high than the last time, and you're kind of coiling up in this fashion. Let me use an actual trend line to make this more accurate. And again, this is a not picture perfect drawing, but hopefully you'll get the general idea. Right, we're coiling up like this, and don't get me wrong, these can break either way. It's not like a 100% win rate. You know, in an uptrend, if there's a rising wedge, it's going to break. Whichever way it breaks is typically the trend to trade. And then if you break out, retest it, and then immediately plummet back through the bottom, you're going to want to trade to the downside, right? And look for lower highs, because typically if you go one way and then immediately back the other, it's going to be the direction you want to go. And the textbook way to play it is, is something like this, where you get the rising wedge. You know, your uptrend is doing this and this and this. You're coiling, you're getting tighter and tighter and tighter, is to sell on the breakdown. But again, what do we really notice is happening here? What do we notice is happening here? It's just an uptrend that's getting tighter. And then at the very end, you have a trend break, right? You have a higher high or whatever that leads to a lower low, and then likely a lower low, a lower high after that. Again, the concept is way more important than being able to point out, oh, look, it's a rising wedge. There's a head and shoulders. Is that a double top? Like, it's good to, notice these things in your mind when you see them, but the most important thing is just to know how you're going to play it. Well, you're going to play it like every other trend break, okay? So, and then another good trade with this one is if you have the wedge, like this, and you have your uptrend. Let me try and draw a little bit better so as to not invalidate. You have it like this, and then let's say you do something like this. You roll over a lower high and then a lower low. What's a good strategy to do here? Fibonacci retrace from that lower high to, let's say this move goes all the way down to here. And then you would watch for a retest of this 50% to 61.8 level for the next lower high, which you don't have to be super aggressive on immediately. On the way up there, you'll be watching a lower time frame trend that looks something like this. And then when you hit that 61.8 level, what you want to see is, you can sell into that initially a little bit, but you really want to wait for this lower time frame trend. Maybe it's a head and shoulders, right? Little head and shoulders here. You want that trend to break down before you can be confident that this was a legitimate rejection of that 61.8 level. Okay? So that's another one. And again, the same thing is true. I'm not going to go into super detail on both sides of it. It's the exact opposite. And a downtrend, it's just going to be a falling wedge with lower lows and lower highs. And that was very poorly drawn. But here, let me draw a little better just for the sake of an example. Right? Lower lows and lower highs like this. And they're coiling and coiling and coiling. And typically, it'll break upwards. Look at the little double bottom in there. Maybe you get, I don't know, or maybe you get an inverse head and shoulders, something like this. Doesn't really matter. What is really happening, guys? It's a downtrend that's turning back into an uptrend after a trend break of these lower highs. Most important concept. Like I said at the start of this video, that's what all these end up being. I don't even feel like it's worthwhile going into the rest. There's hundreds of different charting patterns. There's symmetrical triangles where instead of a wedge, you have, let's see, do we have, I think I drew some on the chart. I guess I got rid of them, but here, I can see one right here. So, what's the most important thing we're really seeing here? This has been an intermediate term downtrend with lower lows and lower highs. There's our lower highs pattern. There's our lower lows. That has now broken into a near-term uptrend. I can actually almost see two patterns here. We kind of have this inverse head and shoulders where we come down to this level, bounce down to this level, fully retrace back into this lower high, make a higher low, pretty much back at this exact same level, and then break up above our neckline. There's one setup here. Simply just buy the breakout of the head and shoulders. And the other thing I'm seeing here, again, after, most important thing to focus on is the trend. After this downtrend break, we have a new uptrend right here, right? We have a symmetrical triangle forming. Where instead of, let me use this. Instead of a falling wedge or a rising wedge, we have an, what is going on? Why is it drawn like that? Oh, I have the magnet on, that's why. We have an equal-sided triangle. Maybe not perfectly equal, but pretty much. And this one can go both ways. You typically want to go whichever way it initially breaks, but the same thing goes like we talked about earlier. If you get a breakout one way and a very harsh reversal, you might want to watch for a rejection and trade that direction instead. And again, in crypto, you're going to get, in all markets really, you're going to get fake outs of these. These charting patterns should not be treated as absolutes. They do not always work out as the textbook will tell you. In fact, I would wager sometimes more often than not, they don't work out that way. But that's the general idea here, right? What is really more important than just, oh, there's a triangle, is that we've come into a key level where we could make a bigger picture lower high, right? Something like this. You know what I mean? Because we did just make a bigger picture, whoopsies, lower low, right? We have this pretty strong uptrend here. And then we made a new low. So in theory, it would make sense to make a lower high in here. But we've got two things to look out for. While we're coming into this level, remember what I kept saying in the Fibonacci thing and in these classical charting patterns is when we're looking for this bigger picture lower high idea, right? This is the trade we're looking for if we're looking for that bigger picture lower high. What we have to watch out for, though, is just a higher low and a new trend emerging, right? Because this trend might be over technically with this new lower low, lower high, but the bigger picture could be just something like this. And that's what we ended up actually seeing. Bigger picture, higher time frame trend, bigger picture trend, intermediate term trend, and then these like little trends are more of our near term trends, right? Stuff like this. Okay? So we've got two sides to this, right? We have the lower high we could make, but we also have this downtrend. More importantly, this new uptrend that has emerged. So we could make a lower high here, but until this uptrend breaks, it's not valid. And instead of breaking, we actually get a trend continuation of our bigger picture trend, right? And so this is the opportunity. Either, you could play both sides here, right? You could sell some into this level and continue buying the higher lows. And once this trend breaks, right? Like say instead of breaking up to the upside here with a higher high, we just made a lower low below here. Or maybe we went up and then made the lower low and got harshly rejected. You could be playing on the long side and then just cut it and flip back to the short side, which if it goes that way. But in this case, it did not. And we continued making higher lows. Here's another kind of pattern here. I guess this would be a kind of a bullish flag where instead of a like sharp wedge, you kind of just have a descending channel of sorts where they're kind of the same angle, if you will, as opposed to a wedge would look more like this, right? So this is my more typical one I see is kind of just these descending and ascending channels, something like this. And then you have the middle point of this channel too. I'm not meaning to keep these, but you get the idea. And so typically what you'd like to see is as they're kind of ping-ponging around, you want to be watching these tests of the middle region for a legitimate breakout. And by that, I mean a close outside of this range like we get here. This is a really nice candle outside the range. This is not. Because you come out, and then before the candle closes, you've closed back in. Okay? This, however, has completely ripped outside of it and closed outside of it. So that's a bullish breakout of this structure. Okay, so what was that, about 15, 16 minutes? I don't want to make this video any longer, guys. Again, there's hundreds of charting patterns out there. The most important takeaway, as I've said 10 or 20 times now, is just to focus on the market structure of the chart instead of trying to focus on what specific pattern it is or anything like that. Just focus on the higher lows, the higher highs, the lower lows, the lower highs, and you're going to do just fine. Okay? So that's all for charting patterns. In the next video, we're going to finally talk about candlestick setups, and I think this is probably going to be one of my favorite videos of this course, and definitely one of the most useful tools in our tool set. Like I said, if I had to only use one kind of, I don't know, concept, it's not really an indicator, it's just a concept on charting patterns, I would trade with no indicators and just use candlestick setups. So that's what we're going to talk about in the next video. Until then, I hope you guys have a great end to your week, and I will see you next time. Peace.